Let's move on to job openings because there seems to be some problems on the surface and the March job openings, which is the job openings labor turnover survey called JOLTS. So we like that. It showed the job openings was totaled 7.2 million. Now, first, like, oh my gosh, it dropped from 7.5 million. We're having problems. The estimate was also 7.5 million. So it looks like, oh, this is not good news. There's not as many jobs open. But there's a lot more to this report than just the numbers.
I mean, there's a lot more to it. And the thing that we look at is the economy, the labor market. It's been so strong that we've kind of gotten, I'm going to say lucky, we've kind of gotten naive, I think, to the way that numbers should look. So we kind of look again pre-COVID because COVID distorted a bunch of these numbers. In 2019, job openings averaged approximately 7.2 million. So again, right exactly where they were in March.
And 2019, great economy.
Great economy. 2018, I'm going to say a good economy as well. Job openings averaged 6.8 million approximately. 2017, they averaged approximately 6.2 million. So we're decelerating, we're softening, but we're coming from such a high level that I'm going to say it's not overly problematic.
And I think the number is, correct me if I'm wrong, but I think there's still like 1.3 jobs opening for everybody looking for jobs. Is that the number? Do you have that? I didn't see that this time.
I know it had fallen, I think, to like 1.1.
Okay.
But again, anything above one is, I think, still very good.
Still a good thing. Still positive there. So another thing I like about the report is the quits ratio of people quitting jobs. And this one surprised me because the total quits of people quitting was 3.3 million. That was a quit rate of 2.1%. The reason why this is so important to me, why I look at it so closely, if you are concerned about the economy, you're concerned about making your house payment, you're concerned about your car payment, you are not going to be quitting your job. You're going to be saying, no, I'll do whatever you want, boss. I'll stay as long as you want. But people saying, no, I'm going to quit because I'll get another job in a couple of weeks. I'm not worried about it. And what is amazing is that the quits averaged about 3.5 million back in 2019. Again, going back to a very strong period. So 3.3, 3.5. Please, we're not in a difficult economy at this point in time. Quit ratio back then was 2.3%, but still.
So we're right in line where we were. But back in 2019, there wasn't the same level of concern, which is why we wanted to kind of pull these numbers in. And kind of to add to your point about you're not going to quit your job if you're worried about the economy for two reasons. Well, one, you need that paycheck to pay for things. Number two, I mean, if you can't find work out there, there's no job opportunities. Why would you quit your job if you don't think there's another job opportunity out there? I mean, I think this is just, again, showing the panic that is maybe not really there yet.
Right, exactly.
And we did want to say as well, just another point, this JOLTS report, it's not just job openings. We talk about quits. The last thing in this report is layoffs. And this amazed me because in the report, we saw layoffs. They remained quite low at 1.6 million. Again, looking at 2019, layoffs average around 1.8 million per month in 2019. So 1.6 million versus 1.8 million. And again, people in 2019 were not talking about layoffs. They were not talking about the unemployment situation as being a problem like they are today. So just kind of looking at these numbers, hopefully it gives you a little bit more comfort in where we are at in this labor market.
And there is no doubt there is uncertainty remains, and that will have some impact on businesses and their hiring plans. We do see them now like, well, I'm just going to wait a little bit longer, see how this whole tariff thing lays out. But in terms of pushing the economy into a major recession, I just don't see it. We're at a healthy level. We've compared for you. 2019, when you're not worried about anything, so why worry now? And like, well, but this could happen. But right now, the data's saying, no, things are pretty good.
And we'll kind of talk about this, the labor market details in terms of new payrolls that were created, new jobs that were created. But in these job openings, the quits, the layoffs, what I think you're going to see here is I don't think you're going to see mass layoffs. I think companies are just going to kind of pause things. I don't think they're going to accelerate hiring, but I don't think they're going to necessarily decrease hiring drastically either. I think with these tariffs, the uncertainty, most likely things are just going to kind of be on pause.
And that's why at our firm, we do spend, Wilson Asset Management, we spend a lot of time looking at this data. We share it with our listeners, our viewers, everybody else, because it's so important not to make emotional decisions. And if this data changes, we'll let you know. We'll say, yeah, we're a little bit worried, but right now the data is showing no need to worry at this point in time. And then, go ahead.
I was just going to say, it's so funny. I always tell people, I want to be very clear. I mean, these tariffs, these trade talks, I'm not saying short term they're good for the economy, but it's just not as bad, I think, as the media makes it out to be.
Exactly. And then we'll move on to the jobs report, which shows more evidence the economy is in good shape. So another reason for you not to panic. U.S. non-farm payrolls, they grew by 176,000 jobs in the month of April, which was well above the estimate of 133,000 jobs. That really surprised me. That was way above the estimate. Healthcare, which we like healthcare, did add 51,000 jobs. And employment and transportation, warehousing, financial activities, also strong, adding 29,000 and 14,000 jobs respectively. Other categories like construction, manufacturing, leisure, hospitality, and retail trade saw little or no change in payrolls, but they're still not big declining, which is good. And things are still, with all the talk you hear, the negative talk, the numbers are telling you something completely different.
Well, and especially this is now in the month of April. The JOLTS report lags. So the JOLTS report was from March. This was from April. So, I mean, this was post a lot of the April 2nd news and a lot of April 2nd concern. And as I said, what kind of happened? Little to no change. So kind of a stabilization, essentially, except for healthcare. And the other big one people talk about is government. I mean, government declined by 9,000 jobs in the month, and they are now down about 26,000 since January. But the important part you have to understand here, and we talked about this before, is that employees on paid leave or receiving ongoing severance pay are still counted as employed. So what is likely going to happen in this government industry sector, whatever you want to call it, in the labor report, that is going to continue to see declines as people start to come off that severance pay. I think you're going to see this decline happen, June, July, August, September, October, November. I forget exactly how long this carried out and as part of the Doge layoffs.
Right.
But you're going to see declines in government employment, I think, for the next 6-7 months.
I don't know about other people, but I like to see the government spend less money, have less people working for them. To me, because that just maybe they could reduce the taxes if they get because there's a lot of fluff there with the government and people working there, and also too expenses. So
yeah, and I think it's. Especially the big thing is if they can be picked up in the private sector, because net, if somebody loses their job in the government and they can't find a new job, that hurts the economy. But the hope is that the private sector can then pick up the lack of government hiring or the government layoffs so that people still have a job and they can contribute to the economy.
And I think you and I have talked just off air different things about, we see in some places you go, there's more administrative people than there are of the people they're serving.
Yeah.
And it's just like, that's not good. So at Willis Asset Management, we try to be very slim and,
efficient.
Efficient, yes. We like to be efficient. So do want to just change gears real quick. I just talk briefly about the inflation front, because we also got good news with that, with the average hourly earnings rising just 3.8%. Why is that good? Because it's a good increase, but it doesn't put pressure on inflation like when wages back in 2022, when they rose 5%. That is wage inflation. That's a problem. So people getting to earn a little bit more without having wage inflation pushing prices up even more.
Yeah, I think overall this was a great labor report. And as you said, we're going to keep our eyes on the future labor reports. But I think this one, we got the data here. We're going to say I got my stamp of approval on it, and we'll see what it looks like next month.
Yep.